Hey guys, what's up? How's it going? Robin here. Welcome back for another video on the channel. In today's video, I'm going to be showing you guys two Canadian stocks I'm going to be adding inside my Canadian-based dividend portfolio. And before we get into the video, I just want to let you guys know that at the time of doing this video, prices and different information about these stocks might vary a little bit, but they should more or less be the same. But I just want to point that out since I will most likely be publishing this video a couple days after I actually record it. And last but not least, before we get inside the video, I just want to say really quickly here, if you guys do like the channel and you guys do like this video and you want to support me, be sure to give the video a big old like and remember to subscribe to the channel if you guys want to see more Canadian-based investing content. Alright, let's get started. So the first stock that we're going to be talking about today is going to be one of my favorite financial stocks. It's going to be a stock I've been buying here and there, and that is Power Corp of Canada. So just really quickly here, Power Corporation of Canada currently trades under the ticker POW on the TSX. It currently trades for $36.21 Canadian, and for all you guys who care about the dividend yield, it currently offers a nice dividend yield of 5.47%. At the current time of doing this video, Power Corporation of Canada is currently trading year to date at a negative 13%, suggesting that it's dipped a little bit at the start of 2022. If you guys are brand new to the company, Power Corporation is an international management and holding company that focuses on financial services in North America, Europe, and Asia. Its co-holdings are leading insurance, retirement, wealth management, investment businesses, including a portfolio of alternative asset investment platforms. Power Corporation of Canada is associated with a bunch of other good quality companies. They own a good share of Great-West Lifeco Inc., IGM Financial, GBL, and some alternative asset investing platforms as well. And the most popular one that you guys are aware of is going to be Wealthsimple and all the different Wealthsimple platforms or apps that you see, like Wealthsimple Trade, Wealthsimple Cash, and Wealthsimple Invest. Even though we've seen a bit of a dip in the earnings for the beginning of 2022, the big thing I like about POW is that they have had a history of good aggressive earnings and growth. We can see that the earnings have grown 18.2% per year over the past 5 years. So the past couple of years, this company has done quite well at growing, and it also pays a nice high and reliable dividend of 5.47% like we mentioned earlier. And just to show you guys how this would look in action if you actually did the math on this, we can see that the 1 year return for POW, if you just look in stock appreciation, is negative 10%. So it is kind of sitting at that negative 10%, suggesting it's a bit of a dip. Over the past 3 years, we've seen a return of 28%, and 5 years, we've seen a stock appreciation of 24%. But if we factor in that nice high 5% dividend yield that we're going to reinvest, we can see that the returns are quite well. So this year, over the past 1 year return, it'd still be at negative 5%. 3 year, it'd be at 51%. And over the past 5 years, you would got an annual total return of 63%, which is pretty solid. So even though we're on a dip right now, I still think it's a great time to pick up the stock because it has had a good, reliable history. So one of the big things we want to look for with a company that's increasing its dividends is going to be how aggressive are they increasing it, and is it sustainable? So if we look over the past 10 years, Power Corporation of Canada has had an annual dividend growth rate of 7.47%. This means that every single year, on average, for the past 10 years, they've increased their dividend by 7%. And at that rate, their dividends are set to double every 10 years. And we can see this cool little graph that shows how these dividend payments have been slowly increasing all the way since the beginning of 2000, and we've seen some aggressive growth happening over the past 10 years or so. And we can also see the forecast that this company also is forecasting to have some good quality dividend increases as well. And with a company that increases its dividends and has steady earnings, we want to look at the payout ratio. So the payout ratio is going to kind of give us an idea of how aggressive the company is growing their dividend, how sustainable it is. At the current time of doing this video, Power Corporation currently has a payout ratio of 44%, which is suggesting that it is using less than half of its income for its dividend. So this basically means that it has tons of room to grow its dividend over time. And if we look over the past little while, we've seen that this payout ratio has held pretty steady. So the company is very conservative with its dividend. Even though it's a high dividend yield, it still has lots of room to grow. If you guys would like to dig more into the company's financials and learn more about the different subsidiaries that Power Corporation of Canada owns, be sure to check out the 2021 annual report on their website. I'll put a link in the description of the video. You guys can check out the report, and there's tons of cool information on the company that you guys can check out if you guys want to dig further. At the time of doing this video, I currently own about 11.3 shares of POW inside my Wealthsimple Trade account. This is a total value of about $410, and its all-time performance is down negative 12%. But this is because I've been buying it over the past year or so. So since it's been dipping, we've seen a bit of a dip, but I do think this is a good quality company to buy. And as long as a company is dipping and it's going to be kind of going in the negative, I do believe in the long-term value of this company. So I think it's a great dividend stock to buy right now. So before we go any further in the video, I just want to do a quick little shout out to today's video sponsor, Neo Financial. Neo Financial is a digital alternative to the standard financial institutions and banks. They offer a wide variety of different services on their website to suit your needs. In today's video, we're going to be focusing on the Neo MasterCard. I've been using the Neo MasterCard to build my credit and to also earn some cool points on my everyday regular purchases. The overall process for signing up for the card was very simple to do, and a few weeks later it came in the mail. And the best thing about the Neo Financial MasterCard is that it has no annual or monthly fees. So when it comes to rewards, Neo Financial does offer some of the best competitive rewards. The average cashback that you can get with Neo Financial is around 5%, but as you guys can see here, there's all kinds of good programs with all kinds of different rewards that you can pick from. For example, me and my fiance went out for pizza the other night. We went and we used our Neo card and we got 3% back on our total order, which is pretty cool. I didn't even expect to get that. And I've also been using my Neo card for some of the basic necessities and bills I've been paying. So for example, when I pay for my Netflix bill, I will use my Neo card. I also use it for other things like my internet bill and whatnot. So all these little things I would normally pay for, I've been using my Neo card to get some nice little cashback rewards. There are over 7,000 different loyalty programs that you can get cashback rewards from. So be sure to check out the website if you guys want to see a full list. And one feature I really like about Neo is that they do allow you a lot of control over your account. For example, I have mine set to get the emails every single time I spend my card. So whenever I spend money on my purchases, I will instantly get an email alerting me of my purchase, as well as an email alerting me of any rewards I got. So I do like the fact that you can control a lot of the Neo MasterCard in the dashboard of the account. If you guys want to learn more and get started, be sure to check out the link in the description of this video. All viewers of this channel can click that link and you can sign up for the Neo MasterCard and get a $50 welcome bonus when you apply. You also get an average of 5% cash back from most partners on Neo. You'll also get a 15% cash back on one purchase as a welcome bonus, and you'll get a minimum cash back across your entire account of at least 1%. So big thanks for Neo for sponsoring today's video. Let's go back in the video and let's take a peek at the second dividend stock that I'm buying today. So the second stock we're going to be focusing on in today's video is going to be a pretty popular Canadian brand, and this is going to be a stock that I'm finally going to actually be buying inside my portfolio in today's video, and that is going to be Canadian Tire stock. Canadian Tire stock goes by the name Canadian Tire Corporation Limited Class A, and the ticker for Canadian Tire stock is going to be CTC.A on the TSX. If we go down here, we can see that the company is currently trading at $170 Canadian. It's not a cheap stock, and its dividend is a little bit less than Power Corporation, sitting at 3.77%. So it's got a more average dividend yield that you'd see from a low to medium dividend based company. Now, Canadian Tire really is one of those big Canadian brands that have been around forever. The more popular part of the stock that you're probably familiar with is Canadian Tire itself, like the Canadian Tire stores that you see around Canada, but they also own a lot of other popular companies like Sport Chek, Mark's Worth Warehouse, Party City, Helly Hansen, Canadian Tire Financial Services, Atmosphere, and some other companies here. The market cap for Canadian Tire is currently seen at $11 billion. And if you think about it, this is a pretty well diversified company. They have retail, they have gas, they have financial services, they have all kinds of different, they even have real estate. So they are a company that definitely is well diversified and has lots of different income coming from different types of sectors. The company also has had some pretty consistent and good quality growth that's happened well over time since the company first launched in 1995. Now, if you look at some of the history or the more recent history, you guys might be familiar with, if you guys have been investing during the pandemic, that Canadian Tire really jumped up here at the start of 2020. This is when the pandemic hit, and I think this really just goes to show you guys how reliable a company like Canadian Tire is at the end of the day for Canadians when it comes to getting everything that they need. If you look at the year-to-date value of Canadian Tire, it's currently seen about -5% or -6% in total stock appreciation since the beginning of 2022, and over the past year it has dipped a little bit, being down 15%. And even though the company has been dipping over the past year or so, I believe this is a great time to buy because the earnings per share has still been rising quite a bit, and the company has done quite well at the beginning of the first quarter of 2022. We've seen an increase of 80% from the EPS, so that's actually pretty good. I think this company, once again, is one of those long-term companies that you really can hold forever. So I went ahead and put a fractional buy for some Canadian Tire stock inside my personal account here. As you guys can see here, this is about $50 I put in. I only had $50 to invest today, so I did a fractional buy to pick up some Canadian stock. So we finally have some Canadian Tire stock inside of our portfolio. Alright guys, that's it for today's video. So let me know what you guys think in the comment section. I hope you guys enjoyed it. If you guys have any comments, feel free to leave them there. I'll try to get back to you guys as quickly as possible. But anyways guys, I hope you guys enjoyed the video. Take care. I'll see you guys later and have yourself a good day.